If you've been watching the news or you've been on social media like Instagram or Facebook, I'm sure you came across this thing that said all Americans are going to be getting $1,000 because of the coronavirus. The Senate Republicans actually just proposed this detailed bill that if it passes, it's going to give some Americans $1,200, and it has an income limit, an upper limit, and also a lower limit. I personally don't qualify for this. It doesn't really affect me one way or another, but I'm curious to hear from you guys. Do you think that it's fair they went from the $1,000 to everybody to the $1,200 to some people? And I know you guys haven't looked at the requirements yet. That's why I'm asking you right now. Before you even find out, do you think this is fair? So they actually released this 247-page document that outlines all the restrictions, the income requirements and everything. Let me read you guys a little bit of this document. In general, in the case of an eligible individual, there shall be allowed as a tax credit against the tax imposed by Subtitle A for the first taxable year beginning in 2020 an amount equal to the lesser of net income tax liability or $1,200, $2,400 in the case of a joint return. The first time I read this, I was like, what? What does that even mean? It was really like trying to solve a math problem. But I read it over and over and over, and I kind of got it now. So I'm going to talk about all the requirements in this video. And I've been checking out a lot of Reddit posts and other videos related to this topic, and I've been seeing the same questions being asked over and over. So I did make a frequently asked question list. I'm going to go over at the end of this video. Some of these questions are, how fast is this going to go out? What happens if I didn't file a 2018 tax return? Because all the numbers are based on 2018 tax return. Also, does Social Security count as income? Does disability count as income? I'll answer all these questions and more at the end of this video. For those of you that are tired of taking naps all day or you ran out of Netflix shows to watch, I'll include this document in the description so you can read it throughout this quarantine. So the first basic requirement that you have to meet is you have to be a US citizen, plus you have to be somebody that's not claimed on somebody else's tax return as a dependent. So if you're claimed as a dependent on somebody else's tax return, you don't qualify for this. Those are not the only two requirements. There's also a requirement of income level, tax liability, marital status, and whether you have kids or not. So to make this as easy to follow as possible, I'm going to break this down into 3 different groups. You yourself are going to fall into one of these groups, and you're going to find out exactly how much you're going to be getting back by the end of this video. Before I start talking about the different numbers and the different income levels, you have to remember 2 things. One, all these numbers are based on your 2018 taxes. So if you didn't file taxes in 2018, watch until the end of this video because I do talk about what happens then. They do use alternate tax year, and I'll talk about it at the end. The other thing you have to remember is if you're filing as married, just double any number that I talk about. So I mentioned earlier that if you're single, you get $1,200. If you're married, you're going to get $2,400. And the income levels are the same, just double them as I talk about them. So the first group of people are people that are making less than $2,500 in the year of 2018 when they filed the taxes, or made more than $99,000. So if you're in that category, you're not going to get anything at all, because if you made more than $99,000, they assume you don't need that money, I guess. If you made less than $2,500, they don't give you anything as well. The second group of people are the ones that made between $75,000 to $99,000. As I mentioned earlier, if you made over $99,000, you get 0. But if you made over $75,000 and not quite over $99,000, they're actually going to subtract 5% from the $1,200 for every $100 you make over $75,000. So to make that a little bit simpler, let's say you made $85,000. That's $10,000 over $75,000. So they're going to subtract 5% of that from the $1,200. So ordinarily, you're going to get $1,200 back if you made less than $75,000. But if you made over that, they're going to subtract 5%. So it's 5% of 10,000 at 500. So you're going to subtract $1,200 minus $500. So if you made $85,000, you're going to be getting $700 in return. The third group of people, and the people I think this bill is supposed to help the most, is the ones that are making between $2,500 to $75,000. And I also want you to remember that you get $500 per child that you claim as long as they're under the age of 17 years old when you filed your taxes in 2018. So if you made between $2,500 to $75,000, you're guaranteed to get at least $600 plus $500 for each child that you claim. But let's say if your tax liability in 2018 was less than $1,200, you're going to get whatever your tax liability was. So if it was $900, you're going to get a return of $900. If it was $0, you're still going to get $600. So the minimum you're going to get is $600. But for the majority of people, I think if you had a tax liability over $1,200, then you're going to get the full amount, which is $1,200 plus $500 per kid. So if you're a family of 4 and you qualify for this, you yourself are going to get $1,200. Your spouse, your wife, your husband is going to also get $1,200. So that's $2,400. Plus, if you had 2 additional kids, you're going to get $1,000 for those 2 kids. So in total, you're going to get $3,400 in this relief effort. So hopefully you understand which group you fall under and exactly how much you're going to be getting back now. So I asked a question earlier to start the video. I want to ask that question again now that you have the numbers and you understand the different income levels. Do you still think that it's fair they went from giving everybody $1,000 to giving some people $1,200? And do you think that the income limits are justified? Do you think $99,000 is too high, too low? Do you think that $2,500 is too little? I personally am okay with that upper limit of $99,000. I think if you're making over that and you don't get this relief, I think that's okay. But I'm still struggling with the lower end. I don't know why they're justifying if you make less than $2,500, you don't get anything. But also if you make over $2,500, you still have to make enough to meet the standard deduction to get the full amount. So let me know in the comments if you think that's fair. Also, if you qualify, is this amount enough to pay your bills while this whole coronavirus thing is going on? Okay, so now I'm going to be answering these frequently asked questions that I've been seeing on Reddit, on YouTube videos. A lot of people had the same questions, so I'm going to answer them. If I don't answer the question that you had, leave it in the comment section and I'll make sure to get to it. If you haven't by now and you're still here, that means you enjoyed this video. You really help me out if you hit that thumbs up button on the YouTube video, give this video a like, and if you want to, you can also subscribe to watch any future videos that I have. So the first question I'm going to answer is, what is an income? What qualifies as an income for this specific bill? I'm going to answer all these questions using the bill itself, so you can use it as a reference as well. Qualifying income. The term qualifying income means earned income, Social Security benefits, and any compensation or pension received under Chapter 11, Chapter 13, or Chapter 15 of Title 38 United States Code. What's the timeline for this? How do I sign up? How are they going to send the check? First, they are going to send the check either by direct deposit or by sending a check. I think it's most likely going to be a paper check in the mail. You don't have to sign up for this. It's going to happen automatically. And the last question, and the one I think causes the most confusion, is the tax return year. So I mentioned earlier they're going to be using your 2018 tax return to determine if you're eligible. So what happens if you didn't file 2018 tax return? They actually put in the document an alternate tax year, and it specifically says alternate taxable year in the case of an individual who at the time of any determination made pursuant to paragraph 3 has not filed a tax return for the year described in paragraph 1. The secretary may apply such paragraph by substituting 2019 for 2018. So there you have it, guys. You can use your 2019 to substitute for 18 if you didn't file one. So if you haven't filed your 2019, make sure you do so you do qualify. I hope that answered all the questions that you guys had. If I didn't answer a specific question that you have, leave it in the comments and I'll get to it. And if you enjoyed this video, consider hitting that like button and also subscribing. The last thing I want to mention is at the beginning of this video, I mentioned that you have to be a US citizen to qualify for this. You can actually be a US resident and still qualify. So I just wanted to make that clarification real quick. I didn't want to have to do this whole video again. But thanks guys for watching. See you guys next week.